This is why a lot of people rely on TA for their moves, because it shows not only an indication of the direction of it, but it also, there's millions of other people or algorithms or funds or whatever looking at the same things you are. And everybody's trying to time it just right. Okay, so the reason that it's very difficult with technicals,
welcome Casey Knows to the Bear Gang.
Trading off of the technicals, is because, remember, the thing about TA that's important is a lot of people trade off of TA. Like, they decide their entry and exit points off of that TA. So when you're talking about a meme stock, it's much more difficult to play it off of the technicals. And I'll tell you why. Let me show you. The reason that a lot of traders look at technicals is not just because it shows the strength. It gives, because other people are looking at it too. So you have moving averages, okay, whether they're on the daily or the long term. Like long term, you have 50-day, 100-day, and 200-day, right? And these lines, okay, will show based on the stock, you know, it moves, and then sometimes you'll see it touch the 200 MA, right? So people will look at the 200-day moving average and saying we're at that 200-day moving average. And that gives them a buy signal, okay? Because every time we've come to the 200-day moving average, we moved up and it upticked the moving average. So we're getting higher lows, right? That's why sometimes you'll hear, well, it broke under the 200 MA or the 50 MA or the 100 MA, meaning it's below where most of the buying occurs. Meaning, sell, 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 sell for some people, right? So just like you're looking at these indicators and the technical analysis, other people are doing it the same, okay? So for example, if I'm looking at a stock on the daily chart, on the 5-minute chart, I'm looking at the MACD, right? I'm seeing it start to come back up, and I'm seeing the moving averages start to curl, cross to the upside. I'm looking at the volume pickup. I'm looking at all these and I'm saying, okay, these are indicators that this is a buy or a sell, right? Because everyone else, not everyone, but a lot of people are also looking at those same indicators. And so if everybody's a hive mind, that can drive the price up or down. That's why TAs are so important. But when it comes to meme stocks, it's much different, because with a meme stock, you could literally have every indicator in the world showing it's down. And one person with a lot of following on Twitter or Instagram or whatever tweets about it, and then it moons. Or the opposite effect. Because instead of people trading off of the indicators, meme stocks are traded off of hype, momentum, and speculation. That's not indicative necessarily of technical analysis. And that's why when I look at meme stocks, I don't really trade meme stocks off of technical analysis because of that. It's still important for, you know, the further out you go in time frame, the more important it is, especially, I'll give you an example. Last year, before COVID, there was, actually during COVID, but before COVID, there was an indicator for Apple. Okay, and it was the 5-day, 20-day, I believe. The 5-day MA and the 20-day MA, if I'm correct. And if you had just bought and held Apple in this time frame, you had made 150%. But if you had bought every time the 5 crossed above the 20 and sold every time the 5 crossed below the 20 and kept doing that back and forth, you would have been up something like 297%. I can't remember the exact numbers, but something along those lines. Or maybe it was like 217%, something. I can't remember what it was. It was some ridiculously higher number. That doesn't always happen, but this is why a lot of people rely on TA for their moves, because it shows, you know, not only an indication of the direction of it, but it also, there's millions of other people or algorithms or funds or whatever looking at the same things you are. And everybody's trying to time it just right. Some people are like, you know what? You ever hear that thing? You ever hear those people that say, and it used to blow my mind in the beginning. They would say, hey, this stock is moving up, but I'm not going to buy it until it gets to here. And you'd be like, wait, why the fuck would you wait for it to get to here to buy, to break above here? Why would you not buy here? Because they are waiting for what we call a support signal, right? They don't want to play this because under this level, whether it's a 200 moving average, whether it's a 50-day moving average, whether it's a previous resistance or support level, that's where they will say, okay, now I have confidence that this isn't just going to do this again. right? Once we break above this previous resistance, where every time it got there, it fell. Once it breaks above that and that resistance turns into a support, that's where I'll buy, because now I have confidence in the upside and less concern of it falling off of that specific level. So that is part of how these things work. Okay. Why does resistance turn into support? So what defines resistance and support is simply the act of the stock, of the equity, right? Because it's not like it's a hard number, right? It's not like it's a hard number where it's like automatic that that's what's going to happen. There's no guarantees in the stock market. It's always a guess. But this gives people confidence that if a stock generally gets to a certain number and it sells off, right? Then most people, as they see that, will also start to sell at those points when they buy the dips, because they're like, hey, it hit that point and sold off last time. I want to make sure I don't, it doesn't happen to me. So I'm going to also sell there. And then sometimes you'll see groups of people start to sell a little bit early because they don't want to miss it, which in then turns creates a lower high each time and puts you into a bearish sentiment, right? And the opposite can happen on the upside as well, right? On the upside as well. You can simply see something, right? People are waiting here to buy, okay? Because that's the support level. Every time it's there, it bounces. But people are like, hey, I don't want to miss the bottom, so I'm going to buy a little bit earlier. Well, guess what? Same thing happens. So that's how that oftentimes you see a resistance change. And when you hear people say, oh, we're getting higher lows, meaning that it's every time we dip and bounce, it's higher than the last time, right? Or we're getting lower highs, okay? Same thing. Because that's what it becomes a support and a resistance, and support and resistance can change. Now, the further out you go, the larger the orders and the more likely it is that we see something different. So for example, if over the course of 1 year, you see a stock do this, right? Yeah, it broke above once, but generally that is the resistance. But the last time it broke above resistance, it fucking ran. So now people are waiting, and it breaks above, and now when it starts falling, does it go back below or does it stop there and go up again? And that's when people look to buy for the upside, right? So you have different types of traders out there, but looking at TA, that's kind of how you look at the charting there. When it comes to moving averages, obviously moving averages depends on the moving average you have. The further the difference between the two, the more long-term the movement is. So if you have something like a 20-day and a 200-day setup, then obviously you're looking for long-term trading, right? Because you're looking at what the last 20 days versus the last 200 days compared to each other are showing momentum upside or downside. But if you use something like a 5-day, 20-day, then you're looking at a couple weeks at a time, and you're going to get more momentum and more volatile swings, as it were. Okay? So when you're looking at it, that is kind of how you look at it. You look at what you're looking for. You're looking for resistance and support levels, because you want to see where people generally are selling and where they're buying. But the question becomes, if they're always selling and creating a lower high because everybody's trying to beat them, beat the sell, that ends up bringing that lower average down. But if all of a sudden people hold on a little longer because they have confidence, well, guess what? Now instead of doing this, and now you start reversing. Okay?
Can you also explain the run-up at open and then the immediate crash like Ewell did yesterday? What are the indicators to look for the fake run-up?
There's no real indicators. What happens is you're generally looking to see why was the pop there, right? Like, why did we see a pop on that stock? Was there a reason for it? And if it's something to do with like, if it's something to do along the lines of, let's say, earnings, right? But they didn't give great guidance, and you're going to have profit taking, right? So people that have been holding something often will sell it at open because they don't have any reason to continue to hold it, right? So it's like with earnings. Sometimes you guys see an earnings do really well and it sells off after hours. You're like, that doesn't make any sense. Well, because remember, investors or traders want to make profit, okay? They want to make profit. And when you come out and you say, hey, we made a whole bunch of money this past 3 months, this past quarter, okay, that's great. And I'm aware of it. I made money with you. What about the next 3 months? Give me a reason to continue to hold your stock that I bought at 90 that's currently at 100. Give me a reason not to walk away. God, that got personal. Fuck you, Mandy. Bitch. All right, give me a reason not to leave. And if you don't give them a reason not to leave, they're gonna take what the good and they're gonna walk with it, right? So that's why guidance is so important. You beat this last 3 months, but did you beat the last 3 months because of COVID? Because of an unusual temperature, right? Like a heat wave or a cold snap? Did you beat because there was a trend? Or did you beat and you're expecting to continue to increase those sales and that I can be confident leaving my $90 in at 100 because I think it's going to go to 110? Have you given me enough reason to keep my money in? Otherwise, if you're like, we're not sure, you give me any lack of confidence moving forward, I'm locking in my profits and I'm going somewhere where I can get what I want. Because I'm not going to waste my time. I got mine, and I'm going to take what I got, and I'm going to go somewhere else, rather than waste my time with somebody who doesn't have a future because they don't have a college degree, and they just lost their job, and they're going to have to, live in a fucking one-bedroom studio apartment for a little while, and I don't want to be with no loser like that. I want to go somewhere else. Fun fact, okay, you got pregnant, he left your ass. All right, so that is why you'll see that happen. And oftentimes at open, you'll see the same thing. Imagine somebody's been bag holding something, let's say a penny stock, right? Let's say it's not a kid. Let's say it's somebody who bought a stock at $1.10 per share. And they have 1,000 shares. And they've been bag holding this shit forever, and it's been sitting like $1.07 for a month. Then all of a sudden, pre-market, it spikes up to $2.10.
Welcome.
Well, this son of a bitch is going to be like, I'm getting that. I'm dropping these bags, at least half my position. So now he sells. And there's another 1,000 other kids out there just like him. And that's what happens. And the fucked up part is the guy who bought it from him up here is now the new bag holder. So there you go. That is why you will often see something pop pre-market and then die at open, because people are like, I'm taking my money, I'm going somewhere else. Now, is it a justification of a pop? Are we expecting continuation? Are we expecting continued increase in revenue and sales, expansion, acquisitions? Are you going to do a buyback, which is generally a buyback raises the price? Are you doing a share offering, which is going to dilute the shares? I want to get the fuck out because now all of a sudden the value of my share is less because everybody else has them, right? It's kind of like, the value of something is more the less somebody uses it. Mandy. Okay, moving on.